All right, what's going on, guys? Going to be doing a quick walkthrough of these trades. So right here, you see me getting stopped out using that inversion fair value gap as an entry, immediately flipping my bias using that mitigation block as a re-entry. And you'll see me outline that with those two red lines. I change it here. So that last up close candle in between your two lows, that is a mitigation block. I was originally looking for sell side at around 21,700. Didn't get it, realized I was offside and that NASDAQ actually wanted the buy side. So flipping my bias immediately, buying the high of that mitigation block. And notice how I was originally short 10 contracts and now I'm long 7. So whenever I take a loss on my first trade, I always make sure to have a second attempt with less risk. But you'll see me pyramid in here. So at the high of that order block, I buy 3 more contracts. But notice how my risk is staying, give or take, at around $300. So even though I'm buying more and adding more contracts, because I'm trailing my stop, I'm never really risking more than $350 or so. So nice feedback off of that mitigation block, order block supporting price. And you're going to see me label this inversion fair value gap here. I'm already anticipating that to be used as support, and I will look to pyramid if it gives me a chance. Trailing my stop a little bit, so you can see I'm long 10 contracts and only risking less than $300. Right now my stop is raised beneath mean threshold of that mitigation block, so it's beneath midpoint of that up close candle, and it's safe there. There's also a fair value gap inside that mitigation block. It's resting beneath that as well. So you see I have my trigger finger on the buy button. I'm looking to buy more contracts inside that inversion fair value gap. You're going to see me buy at constant encroachment, so I'm waiting for this candle to drop down to its midpoint. This is a live account, by the way, real funds, no prop firm, no paper trading or anything like that. So right there, I click the buy button right on that candle closure. Right when that candle closes at midpoint, that inversion fair value gap, I'm long 3 more contracts, and now I'm long 13. And I originally started the position with 7 contracts, trailing my stop beneath our current new day opening gap and also beneath that order block that you see me outline right there. My stop is beneath both of those. And now I'm expecting us to work in the upper half of this inversion fair value gap. And you see I actually want to buy more at the high of the inversion fair value gap. So I've pyramided inside of the order block. I've bought more contracts at the middle of that inversion fair value gap. And there you see me buying what was it, 2 or 3 more contracts, can't remember, but I'm buying more at the high of that inversion fair value gap, and I'm maxed out in my position with 15 contracts. I really don't want to add on any more than that, risking less than $400. And you see me label here, I want speed through that, I want price to rip through that last imbalance. Now why am I saying that? That fair value gap, not the inversion fair value gap, but that SIBI that I'm anchoring, that blue line where I said I want price to rip through that, that's kind of our last imbalance. So if you look left from the buy side and just down that entire price leg, there's really no inefficiency that hasn't been repriced in other than that last SIBI at around 230, 215 or so. So that's why I say I want to see us rip through that, because once we reprice that in, I don't want to see NASDAQ work lower from there. So I want to see us rip through that aggressively. More buy side up there, that's what I'm highlighting. Again, your final hour macro is from 3:15 to 3:45. So notice the time of this price run is occurring within that 30-minute window. Those 3 consecutive down close candles, that is a bullish order block. I would buy more inside of that if I wasn't already at 15 contracts, but I'm maxed out. So I am expecting that to be used as support. Now you see me label the upper half of that inversion fair value gap. I say I want to see support here. Okay, if I'm bullish, I don't want to see the lower half of discount PD raise get traded to. Laptop lagging a little bit, it's all good. So I want the upper half of that inversion fair value gap to be used as support. And if we're truly bullish, if we're likely to go higher, I don't want to see NASDAQ revisit the lower half of that inversion level. So far, NASDAQ showing a willingness to use that upper half as support, which is good. That is bullish order flow. So everything in the trade right now is panning out in my favor. My risk, my stop loss is moved to break even. Trailing it super aggressively here. Market closes in 20 minutes at this point in time. So because I took that first loss when I was looking for sell side, I locked in, if not 85, 90% of that previous loss. So pretty much a risk-free trade. And I'm just letting this thing run. So note the speed that we get through this level in just a little bit. And you can see I typed out trimming my risk because we're running out of time. Market closes in 20 minutes and I want to be fully scaled out by then. If you haven't noticed already, I've mentioned it a little bit in the Discord and on YouTube, but Discord is having a once in a lifetime sale, no pun intended. Lifetime access for the Discord is coming back. One-time payment, full access for life. Live streams, Monday through Friday, live trading. Yes, you'll see my entries and all that real time. Market reviews, homework assignments, webinars, over 50 recordings every weekend. Live streams are saved and recorded throughout the week and then deleted on Sunday before market open. So originally, the way Discord is priced in is $300 for a year, but for this week only, from February 8th to February 18th, Discord will be $250 for a lifetime. So no subscription, no rebilling, none of that. One payment, full access for life, only for a week. So set your calendar, set your reminder for that. You don't want to miss it. I'm not sure when I'll have another offer like that. So there's my partial, taking off 10 contracts there. At this point in time, market closes in about 10 minutes. So I want to scale out majority of my position. You see I take off 2 more contracts and I have my last 3 right there and my last one within striking distance. I'm going to outline that last down close candle before we got that spike higher. That is a bullish order block. So we're trading down into it right there. And you're going to see me label that. My stop loss is beneath that down close candle. Should not pierce that if we want the buy side. Taking the high of that candle, bullish order block. And then you should see some immediate feedback here. This could have been my first $2,000 day had I not taken that first loss. But no big deal. There's a time and place for that. I'm sure it's coming shortly. So last limit order, 1 little micro remaining. I'm trailing my stop up to the buy side, and there we go. There's the final hour macro. Beautiful trade. I'll see y'all in the Discord. Peace.